What's going on, guys? So this is going to be the video version of the thread where I say the top mistakes that new ICT students make, okay? And these are mistakes that I always used to make myself. And over the past couple months, I'd say I really improved on them. For example, I'll see a fair value gap, right? And I'll tell people in my live stream, okay? So I live trade every single day, and I tell people in my Discord, I'm like, okay, you wouldn't short this fair value gap, and I'll explain why, etc. Okay, so the first kind of thing, again, you have to make sure you understand what a fair value gap is. So fair value gap would be something like this. Okay, see how this wick of this first candle does not overlap the wick of this third candle? This is the fair value gap. Okay, that's a bearish one. Bullish fair value gap would be something like right here, okay? Let me just go down real quick. See, this wick does not overlap this wick, so this would be a bullish fair value gap, okay? If you look a little closer, it'd be this wick to this wick, okay? So it makes this gap in between these candles. So that's a bullish fair value gap, okay? And the first main kind of example, or the first main kind of mistake that I used to make myself is I would get squeezed through these fair value gaps. Okay, so what would happen is basically I would take these fair value gaps. So let me see if we can find a good example. Like right here, okay? I'd short this fair value gap, and we just totally don't. I mean, we respect it right here, okay? But let's say you short it the next time you come up, and then your target's down here, sell side. Okay, you're gonna totally get destroyed in this, okay? And your stop loss will be above this high. You see your stop loss is hit, and you're totally going to get destroyed in this, okay? Why are these fair value gaps not working? Okay, you're probably wondering the same thing, okay? Well, in this situation, okay, I would not have shorted because I like to look for equal highs, equal lows. I like to look for some sort of buy model, okay? So what a buy model is let me quickly pull ICT buy model up real quick. What a buy model is it's going to be this curve, and it's going to be this picture right here. And it doesn't have to have all these boxes, okay? So it doesn't have to have all these boxes like this. This is just kind of the general picture. So if we look at this curve right here, okay? It's a little hard to see at first. I'm just going to draw it. Okay, if you look at this curve, okay? Where's the most obvious high? It kind of looks like a cup. Like if you know what a cup and handle is, it looks like a cup. Where's the last most obvious high before this curve started forming? It's right here, okay? So at this point, okay, when we're up at this point and we got this close, see how close we get to the high, but we never hit it? Why would the market want to go way back down here without hitting this high and reversing first, okay? Usually it does not. So when we're this close to this high, I'm like, okay, we're probably going to complete this buy model. If we get another short fair value gap or even a short setup, I am not taking it, okay? In this situation, what does it look like you get? It looks like you get a market structure shift. Looks like you get a fair value gap, okay? So it looks like we should go down and hit where? This low, okay? That does not happen. That is not the case. Why? Because the higher time frame, we got about 3 points from this high. We never end up hitting it, okay? So I know the buy model has not complete yet. If the buy model has not complete, I will not short. Okay, so this is a very key thing to notice. And sometimes you might not know if it's a buy or sell model. In this situation, I didn't know it was a buy model until we got probably somewhere up there, or right around here. Okay, so when we got here, I'm like, okay, this is probably a buy model. When we retrace back down here, I was still bullish because we have these equal highs, okay, which brings us to my second tip, okay? Whenever you short a fair value gap, make sure there's no equal highs above it or no equal lows below it, okay? So let me try to find you an example of this. Ironically, this is the only time I've seen where we have equal highs above and then this fair value gap works. 99% of the time, or not 90% of the time, this will not work. You would not short this fair value gap. Okay, so I'm going to show you like an actual example. Okay, so I think we had equal highs today that I was spotting. Okay, exactly right here. Okay, so here's a fair value gap. Here's equal highs. So in this situation, if you short this fair value gap, your target profit would be these lows right here. Okay, but there's 3 equal highs here versus 2 equal lows here. So more likely this is a better stop loss. Okay, so this is more people are gonna have their stop loss here. So if you ever see a fair value gap with equal highs above, do not short. Okay, I promise you will get wrecked 85% of the time. And I explained in my thread, right? I explained in my thread that most of the time you will get wrecked. Okay, the 15% of the time the play will work. Like the play I just showed you before this, that obviously worked. Okay, 15% of the time that's not gonna work. Again, right here, if you shorted this fair value gap, where would your take profit be? Your take profit would be down here at this low right here. Why would you not short this? Well, we have equal highs above here, okay? And we also have equal highs right here as well. So we have a lot of equal highs up here, which is telling me not to short the bearish fair value gaps. Again, you really want to look for these equal highs and equal lows. My general rule is if I see 3 or more 1 minute equal lows, those are pretty significant. If I see equal lows like this, see this? This is not significant enough for me. I would want to see at least 3 equal lows here, like not even like to the exact cent is what I'm trying to say. But right here you only get 2 equal lows. So I'm not really worried about these. As you can see, they were hit and gone up again, but like these I'm not really worried about. If it's something like 3 or more, like this, then it's like, okay, we're definitely going to hit them. Or let's say we get equal lows spread apart from each other. So this morning, if you look from pre-market section, we had equal highs. Okay, so you got to look really closely. We had 1, 2, 3, 4, 5, 6. Okay, so any bearish fair value gap I saw this morning, I did not even think about shorting. Okay, like this fair value gap, I didn't think about shorting. Why? Because we are so close to these equal highs where I thought we were going to break them. Again, this fair value gap right here, we had equal highs above, so why do you want to short this fair value gap when we have equal highs above? Okay, you can see in this situation, we end up tapping equal highs one more time. We never went over them. And then we get another short fair value gap. And I said to my Discord, I'm like, I'm not shorting this. We have equal highs above. I'm just waiting for a long setup now. Okay, and we ended up sweeping these lows. And then we got the long, and that's when I slapped this fair value gap. The equal highs are my target, okay? So whenever we have equal highs above, do not short, and whenever we have equal lows below, do not long. You want to wait to see if those are swept first, and then maybe you could potentially start looking for long, okay? So that brings me to my second mistake. My third one is longing a fair value gap or shorting a fair value gap after we have not hit liquidity. Okay, so why is this important? So this kind of relates to equal highs, right? So if we have not hit like a major high or low, I would not be longing yet. So for instance, if I go to the 1 hour, okay, and we go to where we are right now, okay, if we got, so right here, Wednesday the 15th at 2 o'clock, okay, I saw this was an hourly buy side model. I saw we got like 3 points off this, as I said. Okay, and this is, I already explained this in the higher time frame, but again, because we hadn't hit any significant high, the 1 hourly, I would never look for shorts until we hit some high. We might not even hit this high. We might retrace all the way back down here and then retrace to this high. It wouldn't matter. I probably wouldn't really look to short. That's just a really, really good tip. I'm gonna try to show you guys another example. Okay, so it's like right here. Once you see us rejecting this fair value gap, okay, I know this is pretty big. Once you see this candle in the process just forming live, once we get to down here, even past this BPR, it's like, okay, this candle's very bearish. We're probably going to end up hitting this low, okay? Again, it's fine to look for long setups in this fair value gap if we get them on the smaller time frame. If I remember correctly, we never actually got a long setup in here. So we end up dumping through, and then once you get like below it down here, you're like, okay, we're definitely hitting the low. If we're that close to hitting a low, never just try to randomly long until we take out that low, okay? So even when we took out this low, I never tried long, I never tried long until we took out this low. On the smaller time frame, we never got any long setups here, okay? I would consider this a long setup, okay? I like this for really get for a long. If you're looking, it's in discount as well. Actually, it's not too much a discount, which is kind of doesn't make me as confident this would work anymore. But again, this is when you look for longs after we hit sell side. It doesn't mean you're going to get them. A lot of ICT traders are like, okay, we hit sell side long right now. Okay, that doesn't mean long right there. It just means look for long setups. So we don't get any long setups on the 1 minute here, or even the 5 minute. I think the 5 minute's better for you new guys. We never get any long setups here, and that's a key part of ICT. Once we sweep sell side, you look for long. Once we sweep buy side, which would be right here, you look for a short. Okay, if you don't get the setup, then again, you're not taking anything. So that's the third mistake I kind of see ICT traders make. They take these fair value gaps before we hit the highs or lows. So if we go to like the 1 minute, okay. Let me see if I can find an example from earlier. Right here, okay. See, we hit these equal highs, so these are equal highs. What do you have long this fair value gap? Right here. If you said yes, that is wrong, okay? We hit these equal highs. We hit this fair value gap. At this point, I'm just kind of observing price. Okay, so I have this drawn on my screen, but because we hit buy side, I'm not longing it. And this happens to work out, but I guarantee you this will not be consistent, where if we hit buy side, then we hit this fair value gap, this will not consistently work, okay? So you have to be very careful of longing fair value gaps after you hit the low, or the high. Once we do hit this high, which we do, that's when I would start looking for short setups back down to the lows again. Okay, so there's no short setup up into here, but then we get a tiny fair value gap right here where we reject, and then your target would be this low. So these are also equal lows as well. So until we get, until we hit some sort of liquidity, do not take fair value gaps. Okay, a lot of people they take fair value gaps the wrong way after hitting liquidity. So if we hit buy side, they'll be like, oh, it still looks bullish, I'm going to long. Okay, this is going to work sometimes, but after we hit buy side, you never want to long. Same thing with a short. Whenever we hit the sell side down here, and you see a bearish fair value gap, like again right here, look at this. We hit sell side. Doesn't this look like a good fair value gap to short? Absolutely not, because we hit sell side. Why would you want to short a fair value gap after we kind of stopped out the big money and are kind of collecting money reversing? Okay, you wouldn't. And that's a very, very key point to kind of understand and realize. Again, if I could, I do live trade. I point this stuff out every day. So I'll literally say on my Twitter, I'm like, okay, I want to take this fair value gap. Why? Because we have equal highs above. Or I want to take this fair value gap. Why? Because we have equal lows below. So those are the main mistakes I kind of used to make myself. I'd get squeezed taking these old fair value gaps when we were in buy models. So you can clearly see, you can start to get this curve. Once we make this candle, okay, it's a pretty strong displacement up. As soon as you get that, I'm pretty confident it's a buy model up to here. So once after that, even if we got a short setup, I probably would not short until after we hit this high, okay? Okay, and also, look what happens when we hit this high. So we hit this high, we get a short setup, okay? And you can see we end up hitting all the way down to here and to this bullish fair value gap. And I would not have longed this, but I would have shorted this. Why I would have shorted this? Well, because we hit buy side. But then in live time, okay, if I go to the replay, when I get to about here, I'm like, okay, and I did alert this in Discord earlier. If we go to my commentary, okay, look at this. I said, I know we hit buy side already, but this is setting up for a giant upside move. Okay, why did I say this? Well, when I see this low resistance liquidity forming, I know we hit buy side. This will always almost be bullish, and this will almost always be broken. Okay, so it's a trend line. It's setting up liquidity. So I'm at this point, even though I know that we already hit buy side, I know this is a possibility working because we have low resistance liquidity form, which means, again, what does that mean? That means more buy side. So if I scroll over a little bit, we end up bouncing, and then we break it, and then we form equal highs up here. Okay, so what happens then if I exit this? We now have equal highs above here. So on Sunday night, okay, you're not going to see me shorting with these equal highs above here. I would only short if we hit these equal highs, okay? So that's kind of the third mistake I see. The final and last mistake I see ICT traders make, I might do part 2 on this, we'll see, is placing stop losses. So a lot of what people do is, even me sometimes, if you long this fair value gap, right? What people do is they put their stop loss under the fair value gap, so like right here. Okay, that is wrong. The stop loss for fair value gaps is always under the swing low. Okay, so if we look at my commentary from this morning, or from today, this is kind of what I was wanting. Okay, so this is the 1 minute chart. If we go to the 1 minute, my prediction was we would do something like this. Okay, so why did I think this? Well, I saw these equal highs right here. So I saw these equal highs. I saw these equal highs. So I was like, okay, this looks like a bullish fair value gap. I'll long it. Okay, if you long this fair value gap, where would your stop be? Okay, well, personally, the stop would probably be under this swing low. Okay, right here. But what some people do is they put it under this low, and then we never hit. Okay, the real stop, if you wanted a full correct trade, the real stop would ideally be under this low. But again, the risk reward on this is not going to be as good. Okay, so my personal one would probably be right here. But the real stop would be down here. Okay, so let's just kind of play out what happens. Look what happens. It never hit, it wouldn't never went below my actual stop. But it gets so close, and you can see how sloppy this delivery is. We, instead of just bouncing out the fair value gap right away, okay, we never bounced out the fair value gap cleanly as we wanted to. Okay, then we end up, you can see, at this point, okay, if we go back in time, at this point, when I see these red candles, I'm not really worried because I know there's still equal highs above here, and I'm like, okay, we got pretty close to here. I don't care if there's a fair value gap that forms. Now, again, I would not short it. And you can see we end up blowing by these fair value gaps. Why? Well, we know we had the equal highs above here. We knew we were in a long setup, so why would you want a short fair value gap in the middle of a long setup that's supposed to hit some sort of sell side liquidity? Okay, so again, your stop loss is always placed under swing highs and swing lows of your entries. Like I alerted this entry in my Discord earlier. Again, my stop would probably be below this order block. Okay, if there's not a really, if the swing low is very far, this is a lot of risk for myself, so I would personally put it under the order block. But what the actual stop is under the lows. Okay, so under the lows and highs, let's say you longed right here. Okay, well your stop would be under this low, and you would have gotten stopped. This is not a trade that we're taking, but that's just kind of an example I'm showing you. Same thing with this. If you are shorting this, your stop is above this right here. Okay, and sometimes what's going to happen is you're going to wick above the fair value gap, but we're not going to go the fair value gap. We're not going to go up above the swing low. And people are getting stopped, and they're like, well, the place still worked. We never hit the swing low high. Why am I getting stopped? Well, that's why the place to stop at the swing high and swing low, okay? It's very important. Again, right here you can see if you got it long right here, the stop's always at swing low. We never hit it. The play would have worked out. We would have hit the take profit right here. Okay, so that's the final mistake I see ICT traders make. I'm probably going to do part 2 if I know there are a couple other things and what I used to do myself. That's kind of a little more advanced mistakes, but it's still something I'm learning myself, so I kind of want to wait till I get some more experience with that. But these are the mistakes I first started making when I first started playing ICT, or when I first started using it. So I hope this video helped you guys. Let me know if you have any questions, and other than that, peace out.